Yo, welcome guys. How are you doing? It's your boy Optimus. I'm here with an exciting video. So in today's video series, guys, I'm going to share with you something that I think is going to make your trading worthwhile, especially if you trade Boom and Crash 500. So unfortunately, I started this, recording of this video after I've already marked these areas, so these areas, these gray areas, I think you are already in the trading industry, so you know what it means. So these are resistance. This is a resistance level, then that's a support level. So I'm going to share with you something that I think really needs to be known, something that I think all of you guys really need to know it, so that you can improve your results when it comes to trading. So I'll be analyzing Boom 500 and Crash 500 only, and that's it. So the topic that we are going to talk about, I just want to talk about traps, okay? Market traps. Most probably those who have traded forex space, they are quite aware of how the dealer traps most of the retail traders. But here also it's just the same, guys. It's just the same, the market really traps people as well, especially Boom 500 and Crash 500, because we do have those smaller ticks and long spikes. So I'm going to show you how it really traps you, how the market really does that. And one of the things as well is that most people or most retail traders use very small accounts, and which means that each and every time when the market goes against them, it will chop off a big chunk of their accounts, meaning that if it keeps on doing that, it means that the account will be blown. But I'm going to show you how to actually avoid that, because the market, what it does is it moves in a certain way so that it reduces most retail traders. So basically, maybe to answer a few questions that I come across with most people, since I leave my number in the description box below most of the time, so most guys, they do pose some questions, they do ask me some questions. So the basic question that I receive most of the times is, what time frame do you use when it comes to analyzing the market? So I use 30-minute time frame, 1 hour, 4 hours, and daily time frame, especially to try to determine the trend's direction. So those four time frames, that's what I use when it comes to analyzing the market. And today also you can actually see that I haven't put any indicators except this year on the indicator window 2, on the indicator window 1, but on the main chart there's no indicators whatsoever, because I really want to deal with the naked chart without any indicators. So guys, first things first, you really need to mark out your zones that you see that they are very, very vital to your analysis, okay? Is what I did here. I did some basic stuff which it can be found with the baby pips. This is our support, and that's our resistance. So now we can actually also put this trend line here. I think it's something that needed to be out there. So as you can see that the market actually broke the trend line, then it retested the trend line and moved to the upside. And also you can actually see that I've also marked this area, because I know that if the market comes back on that zone, it's going to react. It's not gonna just pass it, it's going to react on this level. So let's quickly go down because I don't want to make this video long. All right, so I'm going to scale down to the 1 minute time frame. As we can see, in the 5 minute time frame, this is what happening. So I want to go to the 1 minute time frame. Yes, okay, so that's the 1 minute time frame. So our example, okay, so I want to focus on this area. So let us mark it so that it will be very easy for you guys to see. It will be very easy for you to see. Right, so this is the area that I want to focus on. So let us quickly move. Yeah, so we want to focus with this area here. Now, this is how the deal actually trips you guys, or trips me as well, because sometimes I also get tripped, but it's something that I thought I have to put it out to you guys so that you can actually see when there's a possible trap actually building. Okay, so check this one out here. So the market spiked from this level, going up, it was going up. So most people, maybe when you saw this market coming down, then it spiked upwards, heavily upwards, then people thought, now the market might be going up. So some people, they'll be taking long positions. Okay, long positions. Now it comes down. All right, when it came down, it got to a kind of support, which is here. Then it spiked to the upside. So when it gave this series of spikes, how many people thought that this market was now on an uptrend? Of course, a lot of people, right? So when they entered their positions, let's say they entered their position somewhere here, thinking that the market is gonna keep on going up. All right, you thought the market is gonna keep on going up, but the market didn't. Then it started reversing to the downside. All right, so obviously people would then say, let's wait and see what will happen to this support, and maybe again some traders will then add more positions as the market approaching this this support level. Then before it even reached there, it spiked upwards. Now these guys are now happy that the market is now returning to the upside, is now correcting itself. Then more people also jumping around somewhere here, thinking that the market is going up. Then yes, it gives us a spike to the upside, then it started moving upward. Now you then notice that people who entered around this area, they are now trapped a bit. Then the market started to go down, then it spiked upwards towards this position. Then when they see these spikes happening again, they might be adding more positions that finally the market is gonna push to the upside. Then it gave us this long spike. This is a bad spike, I can tell you, because it does induce a lot of traders. Then after that, it gives these two little spikes here and there. When the market was going down, look what happened. So a lot of orders were piled here. Now we're given another spike here, spike, and another spike, giving us false hopes that the market is gonna go up. All right, now it didn't do that. Then it pushed to the downside, and I tell you, most people, like I said before, most people, they do have small accounts. Some of them, they were being stopped out, and like I said, this was our support. Then it passed, or it broke through the support level, meaning that maybe the stop losses were hit again. All right, when they were hit. But there were also people who saw this movement thinking that the market is gonna go down actually. Then more orders were piled somewhere here for the market to continue go down. But before you even know it, this market moved to the upside. All right, meaning that again, those who were selling their accounts, their stop losses were hit, and even some of the smaller accounts were blown. Now it pushed again to the downside. Then it gave us this false hope again, false spikes, thinking that all right, this market is seriously, since we have this movement and that one, we're going to push this market to the upside. Then it went down. So this is guys, this can be noticed each and every day. I tell you, if you look for this kind of patterns, you would see them, especially if you trade boom and 500, boom 500 and crash 500. You will see these patterns. They do happen each and every time, each and every day. Actually, I'm always on the charts every day, and I come across this almost every day. I'm going to, like I said, this is a homework. You have to go and actually analyze it yourself. I'm going to put C500 and check it quickly, and you see what I'm talking about. It also happens frequently. These guys, the market maker, they do trap, guys. They do trap us most of the times. Okay, so first things first, let's just mark our levels. Where are we? All right. Okay. This is our support. And guys, these things, they do happen every day. Every day it happens. It happens every day. All right. Okay. Maybe. Right. So after I've done so, you have to scale down to see what's really happening. So for you to actually avoid for you to avoid those traps, you really need to pay attention to the bigger time frames, so that you know how this market moves. Even here, guys, look, it's doing the same. It's actually trapping more people. This derive, it's trapping more people, and I will show you how it happens. All right. Okay, so first things first, we did have this spike here. It spiked up to this point, right? It spiked to this point, then it started going upwards. Then most probably, if you're using those moving average strategies, obviously you'll be entering sales here. When it got there, it spiked. Then yes, like I said before, it gives us false hope that the market is gonna go down. Okay, now again we have another spike. Obviously more people will be piling sales. Then look what happened. It goes up, then comes down. So congratulations to those who actually closed their positions when it came down here. But I know that most people, after they've analyzed the bigger time frame, they actually see that this market is gonna continue going down. So most probably, when they see this movement here, they will also pile more positions, thinking that the market is gonna continue going down. but it doesn't happen that way. Look, it now then pushed to the upside. So when it pushes to the upside, it go to a point where it actually drops again. So when it drops again like this, most people again, or many traders, they do pile another short positions, saying that the market really is gonna go down. Now it's actually moving up, moving to the upside, and I tell you, we all know that we all have that problem, including myself. We all have that problem, that whenever you see this kind of movement, you then think, let me just keep on piling more and more positions so that it drops. When it drops, I really make my money. But look what's happening. It doesn't happen that way. It then moves to the upside. So even if you are trading small candles, guys, it also happens. You also get trapped. So like I said, these movements, they do happen. They do happen each and every day. They do happen each and every day. So I want us to look. I want us to focus on this area here. So we got these spikes. Okay, we got these spikes. Thinking that uh you got these spikes right now. Obviously, any retail trader will tell you that this is now a downtrend. This market is gonna continue going down, all right? But it doesn't do that way. It doesn't do like that. It goes up. So let's say you've entered positions here, keep on entering positions, thinking that the market is gonna go down to your favor. Then yes, it gives us a spike. Then it does give us a spike, but most of your trades will be in loss. So you might thinking that if it gave us this long spike, we are going to see another spike coming down, but it doesn't happen that way. The market pushed up, then it gives us this little spike, tripping more and more people. Look, then that's the initial move. So whenever you see crash moves to these kind of highs, when you're opening maybe a fairly large position, you'll be in tears because you would have lost a lot of money. Because I know that most people, they don't use smaller lot sizes on this one, because if you use smaller lot sizes, you don't make much. But I tell you that if you are good at money management, if you're good at managing your money or managing your lot sizes, you really reach far with this boom 500 and crash 500. So guys, this is what I have today for you. I hope to shed some light to some of you. But like I said, you really need to go on your computer, open up your charts, and try to look for these things. Try to look for what I'm saying here. I'm quite sure it will help someone out there. It helped me a lot. So why shouldn't it help you also? So guys, if it is your first time being here, please like the video, share the video, and don't forget to subscribe so that you won't miss the next video that I post. So to those who are just coming back, to all my followers, I wish you all the best in your trades. I know this is a hard I know this is a hard road, guys. This is a hard road to travel, but let us make sure that we are doing all our best in trying of in terms of analyzing the market, in terms of helping each other. So I also welcome any advice, any tips, or any questions that I might think of, that you might think of. You can just ask me, and if I know, I will help you. If I don't know, then maybe we will search them together. So from Your boy Ultimas is bye for now.